Well, happy Sunday. Welcome back to Stock Talk with Erik Anthony. For today, I got some pretty good information to share with you. So last week I had shown you some of the earning reports that had caught my eye. So I want to report to you on a couple just that kind of give us a general idea of what else is going on in our economy, specifically with Campbell's Soups and Ulta. I want to bring you this article that caught my attention regarding Afrm. So for all you Afrm holders, you definitely want to listen in on this, maybe kind of give you an idea of how some things that are going on outside of our country can affect the company today, especially with regarding to lending. It's not the best news, but it's honest news. So I just want to bring it to you, especially as an Afrm shareholder. So look out for that. I want to bring you guys an ALPP update regarding Value Aerospace. In the last video, I was trying to figure out what this little breadcrumb was or little Easter egg that Value had posted. I think I may have figured it out. I want to bring to you guys an update regarding institutional investors. Here we go. Okay, so let's jump into some ALPP news. Like I told you earlier, there was a picture, this one right here, and I was doing a little bit of digging and I was able to find this picture right here. This is a sneak peek at Value's newest generation G1 fuselage as seen in the foreground, paired with the QCA and AVA1 circuit board and ElecJet's A4M1 solid state battery pack. And for all my ALPP fans, you guys would know that every company that I just stated right now, they're all under the ALPP umbrella and their holdings. So expect a video in the next coming days. I'm gonna do a deeper dive just so we have a point of reference of what ALPP is, what they were in 2020, what they were in 2021, how they've grown, and ultimately where we foresee them being in 2022. In regard to the earnings report, we still haven't got confirmation. We do know that the shareholders meeting will be on March 25th. So I'm hoping that we'll get the earnings report right around that time, which should coincide with all the rumblings online around being the latter part of this month. All right, so when we do get those numbers, I will give you guys an update and we'll kind of go over that with a fine comb. And more importantly, for all my desktop metal fans out there, I will be doing a deep dive on not only what desktop metal is today, but I'm going to probably make a couple videos, one going over some of their clientele or going over their customers in more in depth. And I'm going to be going over the production of the P50. The one that I had brought up in the last video regarding Stanley Black & Decker. There's a lot more to peel back in regard to the onion there. So I'm going to be having a video on that. Okay, the other quick update I wanted to give you guys regarding ALPP is our institutional investors. In this graph right here, we are up to about 57 total institutions that are invested into the company, and that is a change of about 3.6%. And mind you, from the quarters 1 to quarter 3 of 2021, we only had 2, and now in the Q4 of 2021, we have 55. Remember, a lot of that probably has to do with the uplist, but like always, it's always great to see that number going up. We're at 3%. You know, that's great. We definitely want to keep seeing that number go up. But again, just want to kind of give you guys an idea of how institutions are playing ALPP as we continue to see volatility in the market. I wouldn't be surprised if more institutions begin to take advantage of these low entry points for ALPP. In the description below, I'm going to put the link down that will show you kind of all the institutional investors that we have right now. And I'll also include the shareholder meeting information that should be taking place on 3/25. I'll put that link below as well. For all my new people that have come to my channel, thank you so much for joining. Appreciate it. And just definitely want to continue to see our community grow. I know a lot of us have been in here since 2020. It's been cool to meet some new people. I met someone the other day that said that they've been in since 2019. Shout out to all those are the goats of ALPP for sure. But again, if there's any of you guys that have information that you feel that I can bring forward to the page, either let me know in the comments below. I will put my my handle to my Twitter right here. You can just shoot me a message on there or just shoot me a message via YouTube, whatever is easier for you guys. But okay, hopefully that gives you guys a little bit more of an update on some of our institutional investors in ALPP. Okay, jumping right into Afrm. Buy now, pay later lender Affrm halts its bond sale due to market volatility. Affrm, the leading U.S.-based buy now, pay later lender, delayed a proposed asset-backed security sale on Friday after a good portion of it had already been sold to money managers, a major investor in the top-rated portion of the deal, also its largest tranche at more than $400 million, was said to have backed out at the last minute due to general market volatility that may have led to wider risk premiums than the company wanted. The AAA slice was almost entirely sold when the transaction was halted. The $500 million ABS start pre-marketing, and ABS stands for asset-backed securities, an early but formal stage of the sales process on March 4th. The deal is backed by cash flows from so-called point-of-sale consumer installment loans, including split-pay loans, an option that allows shoppers to pay for a purchase in 4 interest-free payments every 2 weeks, according to a pre-sale report from the DBRS Morningstar. In light of the heightened levels of rates volatility and consistent with our disciplined approach to navigating a volatile backdrop, we made the decision to temporarily hold off on issuing this transaction at this time. The lender maintains other funding channels aside from ABS, including warehouses and loan buyers, he said. JP Morgan, Chase & Co., Barclays, and Truist Securities were lead arrangers on the offering. Since the start of the year, ABS sales processes have slowed down somewhat and spreads widened slightly due to market volatility and the spectra of impending rate hikes. The Russian invasion of Ukraine exacerbated the slowdown. Transactions are still getting done, although perhaps at softer pricing levels, according to some market observers. The bond is at least the 5th securitized credit transaction either delayed or pulled in recent weeks as Russia's invasion of Ukraine further upsets capital markets already shaken by impending Federal Reserve rate hikes. 3 commercial-backed securities transactions were put on hold in recent weeks, including a $1.5 billion offering linked to Deutsche Bank's new headquarters in Columbus Circle in New York City on February 24th. Fannie Mae also delayed a scheduled deal backed by residential mortgages. Selling any kind of debt from junk bonds to asset-backed securities has grown more unpredictable recently as steep moves in yields result in more deals getting postponed. It's a sharp change in markets that for much of the last 2 years would hand out credit to just about any borrower. While the pulled deal appears to be related to market volatility, the government has been scrutinizing the buy now, pay later, also known as BNPL, model as it becomes more popular with consumers. In December, the Consumer Financial Protection Bureau ordered a market monitoring inquiry into the top BNPL lenders, Affrm, Afterpay, Klarna, PayPal, and Zip. The regulator said that it was concerned about the buy now, pay later model encouraging borrowers to accumulate too much debt. And this is something to keep in mind. If we're ever in a recession, companies like this would probably be hit first, in my humble opinion, as well as the companies not adequately evaluating what consumer protection laws apply to their products. The Bureau also was looking into the company's data harvesting activities, including using shoppers' payment histories to target specific customers with the help of partner merchants. While Affrm had previously priced 8 deals, it's still a fairly new entrant into the ABS market, having only priced its first in July 2020. The lack of track record, along with the unproven collateral results, may have contributed to investors' uneasiness over the transaction, market observers said. And as you can see in this chart here, Affrm took a pretty big hit towards the latter part of the week. So you might want to keep this in mind on whether or not you want to maybe further extend your position in Affrm or just altogether wait until some of the things overseas kind of subside, and then we kind of get into a more neutral ground, especially with regard to lending. I listened into the conference call over at the Morgan Stanley conference from a few days ago, and one thing to keep in mind, he did confirm to the audience that they do take into account some of these blockades, and they really aren't too concerned with these things as they have it already planned in. So hearing this news is not always the greatest, but after hearing that conference call, it definitely kind of reassured some of my confidence in what they have going on in the pipeline and just kind of their overall approach. The links below, I'm going to put the link to this article, and then I will also put the link to the conference call. It's about 27 minutes, so you guys can listen in on that and let me know in the comments below if you see yourself investing in the buy now, pay later space. Okay, so let's hop into Ulta and let's see how they did. Jumping right into diluted earnings per share increased to $5.41 compared to $3.03 in the fourth quarter of fiscal 2020. For the full year, net sales increased 40.3% to $8.6 billion compared to $6.2 billion in fiscal 2020. Diluted earnings per share increased to $17.98 compared to $3.11 in fiscal 2020. For the fourth quarter, net sales increased 24.1% to $2.7 billion compared to $2.2 billion in the fourth quarter of fiscal 2020. Going into the new year, Ulta management is confident that the company will continue its impressive run. The beauty category is healthy and growing, and they are confident that the recovery that began in 2021 will continue as consumers maintain their self-care routines, become more resilient to COVID surges, and engage in more leisure and social activities. Our outlook for fiscal 2022 reflects our expectations for beauty growth as well as the challenge of lapping exceptional performance in fiscal 2021, ongoing wage and supply chain cost pressures, and investments in new capabilities to support future growth. Overall, the company expects revenue to be between $9.05 billion to $9.15 billion for fiscal 2022, and they also anticipate to open 50 new stores in this year. In regard to consumer demand, speaking on the results, Dave Kimball, Ulta CEO, contributed much of the company's success to the ability to navigate supply chain challenges. And this is big because one of the main reasons, if you saw the videos from before, I've been paying attention to different companies in different sectors to see what they specifically say regarding supply chain issues. All I really want to hear personally is that these supply chain issues are beginning to become mitigated. So this is what really drew my attention to Ulta. Our fiscal year ended with better than expected performance, reflecting excellent enterprise-wide execution against our fourth quarter plans, as well as stronger consumer demand and the strength of Ulta's Beauty's differentiated model. The company's large sales jump year over year was also helped by stronger consumer confidence and fewer COVID-19 restrictions in the fourth quarter, which led to a 10.4% increase in transactions and a 9.9% increase in average ticket. Ulta also opened 48 new stores throughout the year. They had closed about 4 stores, bringing their total to 1,308 stores. And again, like I had just mentioned earlier, they also plan on opening 50 more stores. And don't forget, they are in Target and they have something going on with Rihanna. So keep that in mind for all of my Rihanna fans out there. And I'm pretty sure you guys know who she is. But either way, her stamp alongside Ulta as a partnership is probably only better for business. But the main things that I took away from this call and this earning report is just like with anything, when you have beats and stellar numbers and great guidance, the price action for the stock is definitely going to show. But more importantly, we heard some great news regarding mitigated supply chain issues and a more positive outlook on how the consumer is being affected by the C-19 pandemic. So anyway, I just want to bring that to your guys' attention. Do what you please with it. But again, as a nice hedge towards maybe other sectors such as bank, energy, which is super high right now. But remember, just because it's high doesn't mean it's going to keep going. But especially as a hedge towards tech or anything that's being affected right now, this might just be something that might catch your eye. Okay, so jumping from Ulta, let's jump into another space, Campbell's Soup. Campbell's Soup announced its quarterly earning results on Wednesday. The company reported a 69-cent earning per share for the fourth quarter, meeting the consensus estimate of 69 cents. The company had revenue of about $2.2 billion during the quarter compared to the analyst expectations of $2.25 billion, which is a little bit of a miss. Campbell's Soup had a return on equity of 28.27%, and a net margin of 11.40%. Campbell's Soup quarterly revenue was down 3.1% on a year-over-year basis. During the same period last year, the business earned about 84 cents per share. Campbell's Soup updated its fiscal year 2022 guidance to about 2.75 to 2.85 earnings per share to about 2.75, 2.85 EPS. Campbell's Soup Company was trading slightly up during the session after reported its earnings before the market opened. Sales and EPS saw a decline on the year-over-year basis, but this was claimed to be from supply constraints and labor constraints. The financial outlook for the rest of the fiscal year shows for a slight decline in sales and a slight decline in adjusted EPS. One exciting thing with Campbell's Soup is that they announced a dividend. Shareholders of record on Thursday, April 7th will be given a dividend of 37 cents per share. This represents a $1.48 dividend on an annualized basis and a dividend yield of 3.5%. The ex-dividend date of this dividend is Wednesday, April 6th, and Campbell Soup's dividend payout ratio is presently at 47.28%. Let's just go over their EPS and their revenue. Their EPS of 70 cents beat the expectations of 68 cents. Their revenue of $2.2 billion was equivalent to the expectations of 2.2. However, their EPS was down 15.85% year over year, and revenue was down about 3.07% year over year. They're saying that EPS was down due to industry-wide inflation as well as supply constraints. They foresee the second half of the year performance is expected to improve as supply and labor conditions improve, and their financial outlook for fiscal year 2022 was reaffirmed. So what we heard from Campbell Soup regarding the second quarter and how they foresee things to kind of getting better from that point is exactly what I was hoping to hear. And that's why I keep listening to so many conference calls to just make sure that we're no longer hearing that the supply chain issues are going to get in the way of distribution and ultimately sales. So that basically wraps it up. Again, just want to kind of give you guys an idea of other sectors to maybe pay attention to that has an influence on how our economy is doing, an update on Alpp and maybe what that image is of what we had seen from last week. Wanted to review with you guys just how important what overseas can do, especially in the buy now, pay later space. All right, well, like always, thank you so much for checking in with Stock Talk with Erik Anthony. I'll see you mañana.